Good morning, everyone. You've tuned into a session called The State of Fintech. I'm Sophie McNaught. I'm a Director of Corporate Ventures at Silicon Valley Bank, and I'm also our Fintech lead. I am joined today by two panelists. We have Jaidev Shergill from Capital One Ventures and also Osh Kaplan from Munich Re Ventures. Today, we're going to talk about why 2020 was such a bumpy year for fintech. We're going to talk about where these guys are investing and what we can expect to see more of in the coming years. Osh, would you please introduce yourself?
Yes, absolutely. Thank you, Sophie, and good morning, everyone. So I'm Osh Kaplan. I'm with Munich Re Ventures. I've last 15 years been in the corporate and the institutional venture side. Joined Munich Re Ventures about 3 years ago, investing in mostly insurtech-related startups, meaning everything that relate to insurance, both on the distribution side or on the enabling side. We also have a few other funds in Munich Re that relate to insurance. So we are also investing in IoT and connected technologies and connected platforms that relate to insurance, as well as some other industries that we believe insurance will be completely different in the coming years, like digital health and mobility. Great to be here. I would love to talk more about it.
Thanks, Osh. And Jaidev?
Good morning. Jaidev Shergill here. I lead Capital One Ventures. Capital One, as some of you might know, is a bank based here in the US and some presence in Canada and England as well. Capital One Ventures has been around for about 7 years. We have about 45 investments in our portfolio, and we invest in companies that we view could be strategic to Capital One. And so our definition of fintech actually is quite broad, and it includes, not just what one might think about fintech as in consumer fintech, but also all the back-end technologies that help banks function and provide customer experiences. So it includes things like data technology, risk technology, HR technology, cyber technology, etc.
Okay, thanks, Jaidev. And would you be able to just, in fact, both of you give the audience a few examples of some of your key investments so that we have a bit of context to what those investment theses actually look like?
Sure, I can start. So as I said before, we are investing in mostly insurance-related companies. So we see our world as a lot of companies or technology companies that come to insurance and trying to disrupt the whole industry and the way that mostly distribution of insurance is being done today. And on that front, we have invested in companies like Hippo, Next Insurance, Trove, Slice, Insure, Edbay, and others. We are also, as I said, we are looking to invest in the intersection between technology and insurance when it's related to IoT companies. On that front, we've invested in Relayer and Augury and a few others. Yeah, so that's basically it.
Thanks, Osh. Can you just give us a few as well?
Right. Yeah, for sure. So, we look at kind of the whole stack of investing, right? So when we think about the areas that we invest in, we kind of ask a question, how could the company actually work with Capital One, and how could Capital One in turn help the company grow as well? And so if you think about a stack, it starts with all the infrastructure layers. It has the data layers, it has the cyber layers. And so some of the companies, we're pretty proud this year to exit Snowflake. Some of you all might know Snowflake, the data warehousing company. We were investors in Cylance, which exited. We are investors in Riskified, which is a risk technology. Blend, more recently, which is a business as a banking as a service company. And then some consumer fintech companies as well, Moneyline, Dave, and also looking a lot at kind of HR tech, productivity. Liteco, Eightfold is another one that's on the HR tech space that's pretty interesting. ThoughtSpot on the BI layer. So it's a variety of companies that we view as pretty critical to financial services and banks being able to move ahead at their whole technology delivery capabilities.
Okay, great. Now, I want to talk about trends. Obviously, 2020 was the year where, there's certain trends that were in train that have been accelerated. There's certain trends that are purely related to, responses to COVID and our work from home situation. I'd love for each of you to just give your take on what some of the big trends are that you think sort of came in last year and aren't going away. And Osh, maybe we can start with you.
Sounds good. So as the person here that represent the insurtech side, I will try to speak more about the insurance related trends and what we see out there, and I'm sure Dev will cover the other side. I think 2020 was a banner year for insurance. We saw 3 major IPOs, we saw a few different acquisitions, and we actually believe that trend will continue this year. We see great returns on some of those IPOs, so we'll believe that will set as a reference for the industry. For both acquisitions on the side of the incumbents, and more IPOs for other challengers that looking to really grow and expand their business. So I think that's on let's say the liquidation side of the liquidation trends. On the fundraising side, we had also a great year. I would say surprisingly, because if you're looking at the end of Q2, nobody thought that that's what's going to be the year for insurance, and I would say for all the industries. Like any industry, insurtech type of deals were hit by the mid Q1, end of Q2 type of time frame, where we saw a sharp decline in deals. But I would say that if I'm looking at the numbers right now, we finished 2020 with about 300 deals and totaling more than $6 billion of investing into insurtech related companies. So I would say from that perspective, it actually exceed 2019, and both on the number of deals and on the total number. So we believe that trend will go and continue. Now, within the insurtech related companies, we see, as I said before, a few different types of companies. So one of them is the challengers. We believe that 2021 will be another year where the challengers and the disruptors, again, company like the Next Insurance and Hippo and others, trying to challenge the distribution of insurance will continue to grow. And we believe that there will be both some acquisitions on that end as well as some IPOs. And then nextly, I think that another trend that we continue and see is the element of, I call it the white label insurance, meaning people don't really care who is the one behind that provide the insurance, as long as they have the insurance and they have it when the right time that they need it. So it's both usage-based insurance and white label insurance. And to that matter, you see a lot of those aggregators of other insurance platforms that are coming and essentially bring to the customer the best experience of how to consume insurance for the first place, and they're owning the entire experience, the entire user experience at the moment. So you see that more, and then we expect for them to continue and grow as well. And then on the enabler side, as I mentioned before, we are also looking for some enabling technologies that enable the entire industry, both the incumbent and the startups. And we expect to see some acquisitions on that end, again, in a way to compete with some of those challengers. I believe that some of the incumbents will go and make some acquisitions on that end to potentially change the user experience, change some of the underwriting models, change the entire called value chain of their operations in a way. And I would say lastly, one thing that we start to look for when it comes to investing is more around the product innovation rather than just business model innovation. So if you call the disruptors mostly business model innovation, when it comes to the product innovation itself, we are looking to invest in companies that changing and have some they have some core technology or unique value proposition in their core, and they're building the insurance on top of that. So in a way, you think about it as the combination of both enabler and a challenger in one company that's doing it really well. Now, it's not like the challengers are not doing it, but what we are looking to see is really companies that doing things a bit different, and they have really unique differentiation at their core. Companies like one of our portfolio companies at Bay, for example, where they have essentially a technology that's both actively monitoring the risk and providing insurance on top of that in their underwriting models. So I know took some long time to kind of go over all that, and there are a few more, but I would say those are definitely highlights.
No, I still want to know more. What about changes in consumer behavior though? Like that's one thing that is front of mind for everyone, based on the way that everyone's lives were upended last year. Are there any new ways that people are thinking about insurance now, or their willingness to pay for insurance, or just some of those real changes in the way that we're going about our lives? I mean, the obvious one that really has stuck out for a lot of people is that we're not traveling, we're not driving our cars anymore, we're not in our offices, and that has all sorts of implications for commercial insurance as well. Any insights there that people could take away?
Yeah, I think, like you said, there are going to be some changes on that front. We saw some of the changes in 2020 already, and we expect to see those changes as long as we still have some of the implication of the crisis, and as well from the virus. So I think that, as I said before, people want to have insurance. People want to have insurance in the right time and when they need it. And if they don't need it, and if there is a way for them to avoid it, or essentially cancel it, they might cancel it during this time. When we see that affects some line of business of insurance, that's definitely not affect all. By the end of the day, if you're in a home insurance, you buy once a year and you're not going to change it, then actually you're going to spend some more time at your home. So it's in such a year, it's actually more important for you to have the right insurance and coverage. For businesses, I agree with you. I mean, that could change on the commercial side. That could change some of their appetites. But by the end of the day, we see more cyber attacks those days. We see the digital availability of some of those businesses, and they are more vulnerable right now to a lot of different things. So they need to be protected. So I wouldn't see insurance completely change. What we saw is that really people changing the way that they're consuming insurance. So again, only digital. We don't see, we see less people going and even calling their agents. They're mostly chatting with them at the moment. So we see all of that. And as I said before, people don't necessarily care who is the insurance provider behind it, as long as they have it when they need it.
Yeah. And that point about changing the way that we're consuming it has obviously created a huge opportunity in the enterprise space for even customer call center technology and new ways of engaging new demographics. So maybe Jai-Dev, actually, you can somewhat speak to that, because I know that one of your real focuses is the infrastructure that powers a lot of these insurance products, or that have that intersection, or with financial services. Could you give us, we don't have a ton of time left, but could you just give us two of the big trends that you're really paying attention to right now?
Yeah, I mean, listen, I think, the pandemic has actually resulted in some pretty interesting, I'd say tectonic shifts in customer behavior that probably would have taken, years, if not a decade, to get there. One I think is probably going to reverse, which is savings rates, right? If you look at just the opportunity to spend, traveling, we're all dying to do it, but we haven't been able to do it over the last year. Just browsing around at, shops, malls, eating out, all those behaviors have kind of gone down dramatically over the course of this year, but that's resulted in a savings rate that is, been probably the highest in a decade. I was just looking at this, 2019, the savings rate was 7.9%. In 2020, it's 17.2%. So this is probably,
I think it's actually the highest it's ever been.
Probably, and guess what? When things start opening up, that whole coiled spring is probably going to let loose, and there'll probably be an abundance of travels, and you can and shopping and restaurant bookings, which we think are all going to come back. But if you think about the second big thing that's happened, therefore, is as financial institutions have thought about their interaction models with customers over the last decade, they've been building a lot of capabilities to go into enhancing mobile applications, enhancing web applications, things as small as remote check deposit, has been in existence for a while on phone apps, but mobile apps, but people just haven't used them as much. And this year, there's a I think what I'm seeing is a 20% across the board increase in remote check deposit, which is, you wouldn't get that normally. A bank would see, 1 to 2% increases a year. So, 20% increase in account to account transfers. And I think these are changes that people are not going to reverse, because it's just so much more convenient to do things in this digital fashion. Right now, the so what to all of that, I think, is where it gets really interesting. I think banking as a service is going to be increasingly important, and companies that provide banking as a service are really going to flourish. There's a super interesting case study on Blend's work with M&T Bank to set up their PPP program, which they did in something like 3 days. So if you start thinking about technology just happening in these chunks now, and banks getting much smarter about not building everything from scratch and being able to integrate pieces of technology so that they can get a customer offering up much faster than they did, I think that's going to be a trend that's going to continue for a while. The other kind of so what is just this massive upgrade of technology stacks, right? The reason why enterprise tech companies did well over 2020, and there's a lot of spend against them, is because companies have realized, right? Large incumbent companies have realized that they have to upgrade their technology stack. And I think this is a trend that's going to be a decades-long trend, because it's not a simple thing to change your whole stack right from the bottom to the top. You might say we're going to go to cloud, but the minute you go to cloud, you got to change your whole stack on top of that to take advantage of what cloud has to offer you. And so I think you're going to see this massive tectonic shift in how corporates are thinking about technology and making it much more central, and banks making it much more central to their day-to-day business versus just something that needs to be done, right? No, this is it. And the customer experiences everything come out of that. The kind of concluding point on all of this that I'll make is, I think there's also been a really exciting shift in the financial markets. We can talk about valuations till our face turns blue. We think that there are going to be a handful of winners. The whole digital mind space is scalability. So instead of having 50 companies serving a space, you'll probably have 4 or 5 taking a lion's share of that space. And so, valuations for those kinds of companies are going to go up, and they're being rewarded. And you're seeing this with the opening up of the IPO market and of innovative new ways like SPACs coming into actually providing the liquidity for some of these companies to grow and for investors to actually realize exits. And I think, 2020 definitely proved that. And I think we're going to keep seeing more of that trend into the next few years.
Yeah. And as you said, we could talk about valuations till we are blue in the face, but I'm getting the nudge that we are out of time. So I have one question for both of you, and you can talk about valuations if you like. And that is, what is the unknowable thing that if you could, you'd love to know?
When exactly the vaccines are going to come in. I mean, that's a big issue for us.
I think a lot of people feel the same way. I don't think I had many conversations last year where the question of when the hell is this going to be over didn't come up. What about you, Ash?
I mean, I would say it's probably relate to that, but it's more around like, we definitely widely spread. And when things are getting back at least to the new normal, is that going to be a new normal, or is it going to be the normal that we've seen before? I mean, trying to understand, I guess, where are we heading in terms of the entire way of the new reality that we're experiencing right now. Is that going to be going back to what we knew?
Yeah. All right. Well, thank you both so much for your time, and thank you to everybody for tuning into this session. I hope that you took away at least a couple of nuggets, and please reach out to any of us if there's anything that we talked about that you'd like to dig into a little more.
Thanks. Thank you all.
We're really focused on helping large companies disrupt from the inside out, which is creating, building, and launching new ventures that are generated from within and building their own incubators, and what we're calling disrupting outside in, which is helping them do world-class kind of corporate venture investing.
You need to have someone who really understands the parent company, but you also have to have someone who understands venture.
When we started TDK Ventures, we decided to be looking at a fund of $50 million. Mac 49 has really been helping us to understand what are the details that actually really matter versus the ones that don't matter.
That has been very helpful because even myself, that I'm coming from outside Schneider, I'm not an expert on VC. And there are best practices of what works and doesn't work. So I'm learning from the experts.
Coming here from Meatpacking New York in our offices, blocks from Samsung, Facebook, Google, PayPal, the Denton's Venture Technology Group is excited to be partnering with GCV during its Digital Summit. The Digital Summit is particularly meaningful for us as a firm, given our focus on representing corporate strategics worldwide. Whether you're investing from London, Frankfurt, Shanghai, or LATAM, we're excited to engage with you.
Small business owners. This is how to grow a small business.
What makes companies succeed the most?
Very rewarding from my side, rewarding from theirs. We've achieved a lot in a very short period of time. 5 lots of 2-hour workshops have generally achieved far more than any of us could have hoped.
Thanks to Star Venture program, we are really growing quickly and scaling up. Nowadays, we build the security robot in 3 weeks. Thanks to Star Venture program and to these specialists, we are working to build it just in 72 hours at the beginning of 2021.
We had a problem as we have entered the artificial intelligence sector. We did not have the right resources and expertise to complete our product. Thankfully, through the help of SVP, we managed to access excellent talent in a few cities in the EU, and we are currently developing our R&D in AI.
It was and still is a wonderful journey, and I hope many more companies work with the Star Venture program, and I thank the team for everything they've done with us so far.